Good morning, everybody. It's Tuesday, December 24th, 5:26 a.m. Central Time. Grain markets are mixed this morning. Quiet overnight trade, definitely getting into holiday mode. March corn futures down a quarter cent at 447.5. January soybeans up 3.5 at 973. March Chicago wheat down 1.5 at 539.25. March Kansas City wheat is unchanged at 551. March spring wheat up 1.25 at 596.75. A couple of housekeeping notes, guys. First of all, Mackenzie, we'd like to wish everybody a Merry Christmas.
Most definitely. A Merry Christmas to everyone.
Merry Christmas, guys. We love you. Thanks for watching. Thanks for listening. With regard to the schedule this week, the grain and oilseed markets traded on the CME are going to close early today, 12:05 p.m. Central Time close. Following that normal close, we will reopen on Thursday morning at 8:30 a.m. Central. We are taking the day off on Thursday, so we won't have videos or anything, but we will be back on Friday. With that being said, let's jump into the show. South American weather is where we will start.
So, Brazilian weather will remain nearly ideal, while Argentina is slated to turn dry. Argentina's soybean planting campaign is about 2/3 complete. Key soybean areas are slated to see less than half of their normal rainfall over the next 2 weeks. While it's perhaps too early for a full-blown crop scare event, the soybean meal market has taken notice. Soybean planting is complete in Brazil, and weather forecasts appear nearly ideal. The vast majority of the country's soybean areas will see above normal temperatures over the next 2 weeks. USDA projects that Brazil will account for 40% of global soybean production this year. Argentina is projected to account for just 12%.
Let's run back through these maps. So Argentina is not going to be totally void of precipitation. It's just going to be very scattered over the next 2 weeks. And there are some big time soybean areas that are going to be on the drier side, maybe Cordoba in particular. When you look at precip versus normal, what's expected, same kind of statistics we were looking at yesterday. Over the next 2 weeks, Argentina soybean crop weighted by production will see 47% of its normal rainfall. The extended forecast, 15 to 28 day, looks a little bit more normalish in terms of rainfall. So it's very early. They're still planting beans in Argentina in some areas. They're about 2/3 done, maybe 70% done. It's probably just too early for a full-blown crop scare event, as Mackenzie mentioned. Brazil looks really damn good. I mean, Mato Grosso is going to see above normal rainfall over the next 2 weeks. The only place that's going to be dry with regard to soybean areas will be far southern areas. And I think they had some flooding and some excessive rain earlier, so maybe they're looking to dry out. When it comes to soybean production, you've seen the statistics. Those two countries combined will account for 52% of global soybean production, if USDA is correct with its projections, of course. The soybean market has 99 problems. It's got a lot of problems and a lot of bearish items. The list of problems reads something like this. You've got projections for a monster, just hugely burdensome supply and demand situation globally. You've got really good looking Brazilian weather and crop prospects. You've got Brazil currency issues. We're going to talk about that in a second. You've got pending trade war, tariff type stuff coming up in less than a month. You've got lack of biofuel guidance from the U.S. government. We could really use 45Z. We've got a lot of problems. Looking at this March soybean contract, this resistance area, 982 to 1009. This is a big area above the March soybean contract. We traded above that 982.5 level very briefly yesterday, rejected it, went back lower. If you could somehow get above that trend line, which is 1009 today, it'll move lower every day. That would be very, very positive. World ending stocks projected to be record large. I talked about this before in this statistic, which I think is telling. World ending stocks are projected to equal 78% of this year's Brazilian crop. So it's almost like at the end of the marketing year, you're going to have, almost a full Brazilian crop left over. That's how many soybeans we've got in the world, which is staggering. Stocks to use ratio projected to be record high. We've just got a lot of soybean problems. And the market hasn't totally fallen apart. A lot of people think we should be sub $9 on the board, and we're not. Maybe it's coming, but we're not there yet. Okay, meal. We talked about this yesterday. Argentina is the top soybean meal exporter on the planet. And if the trade is going to decide that it cares about dryness in Argentina, this is where you'll see it, is in the meal market. We saw it on Friday. We had a big rally, but the rally failed yesterday and we reverted back lower. So we'll see if we can find some footing today. This is your tell. Keep an eye on the meal market, and that will tell you whether or not the trade is concerned about the Argentina situation.
Brazil's benchmark interest rate is expected to increase sharply as inflation runs high. According to a survey of Brazilian economists, the benchmark rate will climb to 15% by June of next year. Rates were raised a full percentage point to 12.25% this month. Inflation continues to run high down in Brazil, and it's estimated that consumer prices will continue to increase. The depreciation of the Brazilian real is also contributing to elevated inflation levels. Investors are ditching the currency due to doubts about the Brazilian president's commitment to improve the economy.
Brazil's got a lot of problems. And I think with regard to our stuff here, the soybean market, and especially just futures traded on the CME, the currency issue is a bearish item with regard to U.S. soybeans that are priced in dollars. So when you're a soybean exporter in Brazil, you sell your beans in dollars, and you are then able to go take your dollars, convert them to reals, and your buying power, even because the Brazilian real has got weaker, your buying power domestically within Brazil remains the same, even though you've reduced your pricing in dollars. So it's not any like big shock that Brazilian soybeans are more competitive than U.S. soybeans on the export market this time of year. That's a pretty normal seasonal shift that you see around this time of year. But the currency issues have helped to push that shift even further. So the U.S. may have a tough time competing on the export market moving forward. We're still going to sell some beans, but not in the way that we have been selling them, because Brazil's crop looks to be in really darn good shape, and this currency issue just makes the competitiveness situation even worse for the U.S.
So if
export
you
situation.
so if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
I'm glad, first off, that we're done talking about direct payments for a while. I think we're going to do
Yes.
one more like kind of video to wrap it up with Paul later in the week. Yesterday, we talked about grain hauling costs, and Chris Barron made a free tool available. This is something that I guarantee most of you guys don't do correctly. And in, again, an environment where margins are non-existent to razor thin, keeping an eye on every penny is very important. And this is for some of you guys who run a lot of trucks, or you've got a longer distance perhaps to deliver grain. This is a big deal. And we had a really good question that came in from a subscriber about this exact topic, so we figured we'd run through it. That video was out yesterday. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tries to sell you anything else. You'll get our morning email every single business day at 5 a.m. Central Time. It includes all of our headlines, tons of graphics, charts, all of my cash grain marketing recommendations. All of our premium videos are included here. It's super easy to access on your phone. You just click to play. There's no login instructions. Super easy to do. You can sign up on your phone. It takes about 30 seconds. Google Pay, Cash App, Apple Pay, all that stuff. Check that deal out today, guys.
Above average temperatures are expected to impact Russia's winter crops. According to the State Weather Forecasting Agency, recent unusually warm temperatures could cause sprouts to resume vegetation. Earlier this month, data revealed that Russia's winter crops are in the worst condition on record, with over 37% rated as poor or yet to sprout. Russian consulting group Sovicon is projecting this season's winter wheat crop acres to be about 5% less than last year. The group is also estimating Russia's wheat exports to decline by 17%, mainly due to lower production.
So the concern here is warm weather, and I suppose the concern is that you're going to see like early super premature emergence, and then it gets cold again, and that would be problematic. Most of the wheat grown in Russia and Ukraine, if you guys are watching, it's toward the bottom like third of this map, but still temperatures on average over the next 2 weeks as it relates to the Russian winter wheat crop are going to be 5.7% above, or 5.7 degrees rather, above normal on average, according to our friends at Crop Profit. Ukrainian wheat 4.6%, or 4.6 degrees rather above normal. So a little bit above normal. I don't know if this is a big concern or not. Sovicon was out yesterday, and they reduced their export estimate for next year's wheat crop down to 36.4 million, which would be down 17% from this year. So they're thinking crop problems. I think the market is disinterested because wheat futures have acted very poorly.
U.S. soybean shipments were near the upper end of pre-report expectations last week. USDA reported that 64 million bushels of beans were inspected for export during the week ending December 19th. The print was up 3% from the previous week and up a whopping 56% compared to the same week last year. Corn shipments were reported at 44 million bushels. The print was down 1.7% compared to the previous week and down 8.5% versus the same week last year. Wheat shipments hit a 12-week high and surpassed expectations at 15 million bushels. The print was up 34% from the previous week, but down 15% versus the same week last year.
Pretty good stuff across the board. Soybean shipments are seasonally very strong. This is what I'd call a spaghetti chart on my screen here. If you guys are watching, we are exiting primetime U.S. soybean shipping season. It's kind of past us here, but you can see my white dot. That was last week relative to prior years. It's about as good as it gets seasonally for this time of year. So we're shipping a lot of beans, but that's going to change. We mentioned that South America is becoming a lot more competitive. We hope that this maintains relative strength, but just generally speaking, relative to what we saw in October, November, you're going to see soybean shipments drop off.
USDA reported two flash sales on Monday. U.S. exporters sold 5 million bushels of corn to unknown destinations for delivery during the current marketing year, and exporters also sold 5 million bushels of soybeans to China for delivery during the current marketing year.
So the corn sale was to unknown destinations, but in a curious amount of 132 million metric tons, which was the exact same amount of the soybean sale, which was listed to China. So could this have been a small corn sale to China? I suppose it could have been. The market doesn't seem overly excited. If it was, I don't know if there's going to be a whole lot behind it. That's the pessimistic view. Maybe the optimistic view is that, hey, U.S. corn's really competitive, and we are. U.S. corn's competitive versus Brazil. It's competitive versus Ukraine. China could buy some corn from us. I mean, we haven't seen the evidence that it's going to be anything sizable, but never say never. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were 95 cents lower to 10 cents higher. Feeders were 2 cents lower to $1 higher. Box beef was slightly higher. Choice ended the day at $315.98. That was up 13 cents. Select ended the day at $286.75. That was up 84 cents.
Outside markets also entering holiday mode. U.S. dollars just a little bit higher. Stocks are mixed. Bonds are mixed. Precious metals are mixed. Crude oil is up 67 cents in the March WTI at 69.48. Merry Christmas, guys. We'll be back on Friday.